Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review. The information provided in tonight's recording is general advice only. Investor Signals offers a platinum membership, which is a mentoring course across the various subjects that are on screen there. And if you'd like to know more about our platinum membership, please give me a call on 1300 614 002 as we go through tonight's recording and analysing the ASX top 50 stocks using the tools that are available as an Investor Signals member. I'll share with you some of the philosophies that we focus on during our weekly webinars and in our member-only advisory research service. So just to highlight some of the other services that Investor Signals provides, we have a personal investor account, which is a brokerage account in your name where I act as the advisor and I work to execute the orders. Most clients tend to follow our ASX top 50 model, as well as capturing some exposure to international markets as well through either ETFs or US shares. The way I break up the two distinct investment styles is to highlight to clients that portfolio investing is very different to trading. When we think of portfolio investing, we're thinking about buying good quality companies with growing earnings and taking into account a combination of technical indicators as well as macroeconomic and specific company news to determine what the right weightings are in a portfolio. The Investor Signals Algo Engine provides a great framework to help with that decision making, and I'll be sharing some of that analysis with you tonight as I go through the top 50 companies. So when it comes time to add new investments to the investor portfolio, I tend to have a preference of scaling into those positions based on a value range. So I'll often identify an area on the chart that represents value from a combination of future earnings expectations, current PE, dividend yield, expected earnings growth, and then obviously the momentum part of it, which is a key part, which is the algorithm, which are the red and green boxes at the top and bottom of the screen. So the chart you're looking at there is a fairly recent chart of CSL, and we'll have a closer look at the chart and see how that unfolded following that sort of 270 support level there that was identified. And it was helped to be identified because we had the algorithm buy signal. So again, as I go through the charts tonight, we'll draw your attention to those signals and have a look at some of the recent performance of the algo engine. Momentum trading is something that we're starting to integrate more and more in the commentary. Clients interested in taking advantage of shorter term opportunities in the market. So by that meaning days and weeks, whereas investing I think about months and years. So in momentum trading we utilize a tool in the software which is the pivot point table. This is a live screenshot following the close of market today. We see nothing there on the long side, and I'll explain more about that as I go through the charts. And then at the end of tonight's recording, I'd like to finish by having a look at the top 50 in real time in the pivot table and just talk a little bit about how that ties into the analysis across the top 50 stocks. So the momentum table picks up not only the primary algorithm signals, but using some short-term momentum indicators to try to capture that shorter time frame that I mentioned. The type of patterns that we look at, you'll hear terminology tonight referencing the pivot low or the first test, first fail. So just to be clear on what that is, the pivot low is where we see the green arrow, and it's often the point where the rally begins from. The first test, first fail is where we'll allow the market to move in our favour. It'll pull back, retest the low, buying support will come in, and that sets up the kind of entry pattern that we look for. So that's a long side, and then obviously if you're shorting the market it'd be similar in reverse. So momentum trading is often based around that type of technical setup. And then the other part of momentum trading is index trading, which is very popular. Obviously, it sets the overall tone for your outlook on the market, whether you're risk on or risk off. Clients take advantage of the index commentary by either trading ETFs, futures, or index CFDs. So again, if you have an interest in learning more about either the investment style or the momentum trading style, or both, please inquire about the Platinum membership, and I'm happy to explain more to you over the phone. So with that, let's jump into a review. So as a full-time member of Investor Signals, every week we follow a similar type of structure as I'm running through tonight. So I normally start the recording by having a look at what's gone on the blog, which is our research service, and then move into the index analysis, and then we'll move through the top 50 and then finish with a review of that pivot table, which is the momentum trading approach. So if we have a look at the post here today, this was just highlighting Tabcorp. We added this at around 90 cents. It's up about 16.5%, maybe a little bit above 90, sorry. It's up about 16.5% from the original entry. You can backtrack through the commentary on the blog there and identify. So that was the first test, first fail, the entry point there at around, I think maybe it was a little above 90. The pivot low was 90. The entry was about 92, 93 cents. And the stock's now rallied up. So the reason why I've added this post today is just that we've now had this shift from algorithm buy conditions into algorithm sell. The price action's still above the moving average. So as a trader, you could stay long this stock, but we can see we've got the red arrow and the red primary signal, which again's the box at the top and the bottom. So you can either take profit now simply because of those two signals being present, or you could just give it a little more time and wait for these momentum indicators to roll over. So that would be a reference to either the stochastic here rolling over and moving lower, or even the price action moving below the 10-day average. But obviously you run the risk of giving up some of those gains if you're waiting for that to move back below the 10-day average. But our original target on Tabcorp was up at around 108, 110, and we're getting close into that zone there at the moment. So scrolling back a little bit further, they were all early sort of setups there with Tabcorp. So that was very early off the pivot low there. Then we get into the commentary that I provided on the weekend around the S&P 500. So the context here is that we've been long the S&P index trade and have been for the last 6 weeks or so. But what we're starting to see is the first warning sign, which is the red arrow. We're still mindful that this low's taken out that low. We still have a lower high structure. So whilst this is a nice bullish reversal and that pivot low that I've highlighted, we've got the first test, first fail support. We're still not yet in an environment where we're making new highs and creating a bullish sort of structure. But the pattern so far over the last 6 weeks been encouraging. What we're looking at the moment is probably a little bit of consolidation in the market. So the commentary here is stay long the index, but just be mindful if we start to see price action below that 10-day average as my trigger for setting up some short exposure, or at least taking profit across some of the active positions in portfolios. So again, you can activate your trial, join as a member. You can read back through this commentary, so I'm just going to skip through some of that historical analysis there. XJO, we'll look at this in a bit more detail in a moment, but the same pattern, first test, first fail, red arrow, price action above the 10-day average. So the commentary is pretty simple, stay long, but just be mindful of a close below the 10-day average. Again, just skipping through that XJO commentary. That was sort of prior posts on Tabcorp. But given what's been happening in the market, we're probably moving more into a stage where we're looking at taking profit on trades than opening up a lot of new ones, but part of tonight's recording will be to highlight those opportunities that we're focusing on. ASX, so the pattern here was pretty simple. Green arrow, rally off the 65 support, price action stayed above the moving average, and the stock rallied from around 65 up to $72, $73 there. So Aurora was another one, so a little bit oversold was my commentary there in Aurora. That rallied from about 290 up to 315. Ampol, tight stop losses on this. We got stop losses in there at around 28, I think around 28.15. So may have come close to getting that taken out today. But Ampol, so that's a trade that we've still got active at the moment. Aurora, well, we've already covered that. Brambles, so the commentary there was just the higher low, and I'll look at this chart and provide more analysis as we toggle through them this evening. But the rally higher off the $11 support, 10.50, wait for the higher low, and we should be getting sort of some fairly positive price action there in Brambles, especially given the stronger earnings that came through. Moving back through older articles here, the Vanguard Australian Property Securities Index, so this is an ETF, broad-based exposure to the REIT sector, that's continued to move in our favour. And what I'm doing here is just going back 7 days, and then there we are back to last week's webinar. So let's jump in, have a quick look at these indexes, and then I'll move through the top 50 stocks. So looking at the Nasdaq again, I just highlight that whilst this reversal here on the 13th of the 10th is encouraging, and we have a higher low formation off that pivot low, we're still sort of pushing against this lower low, lower high structure. What we would really like to see is the market start to create new highs and a new algorithm buy signal on the other side of this. But for the moment, there's no reason to be too negative about the market. We'll reassess that if we see a close below the 10-day average there. If we look at the S&P 500, largely as I described earlier in the post here, so we had the pivot low, the first test, first fail, it's rallied up, still making sort of higher highs and higher lows within this trend, but overall we're still fighting this lower low, lower high pattern. So just watching closely how this behaves, keeping the index positions open, but if we get a close below that moving average, I'll be shutting out the index positions and moving to some moderate level of short exposure. Locally on the XJO, so this is the pattern here, again pivot low, first test, first fail. We've been long as it stayed above the 10-day average. We've now got the red arrow, which is our first warning. Second warning will be a close below the 10-day average. Now, I don't want you to panic when I say the word warning or shorting the market. It's just an opportunity, so depending whether you're running long short strategy in the market, you may start to think about having some short exposure. You may just simply start to think about where can you take some gains and then reallocate that money when we get a new sort of higher low formation in place. Alright, so with tonight what I wanted to do, click on watch list, let's go in and have a quick look at the ASX top 50. The way I arrange this is get the percentage gains to the top and then under buy signal. So all these stocks here that are under buy, you'll also find them in the model portfolio. So if you click on model portfolio, ASX top 50, get the least number of days to the top. What we're looking at here is Brambles was added to the model portfolio on the 3rd of the 10th. It was added at $11.23. It's up 2.6%. It's been in there 49 days. As the dividends flow through, that'll compound onto these percentage returns. And you can see there CSL's been in there for 59 days. ASX, Santos, Cochlear, something like Origin's done extremely well, been in there for roughly a year. Woodside has done extremely well as well. Computershare's the best performer. So as I move through these first part of the webinar on these ASX top 50 stocks, you'll recognize that all the ones that are under buy signal are these companies, and I'll be more focusing on the more recent buy signals rather than going back too far in time. So with that, again, go in the watch list, get the percentage gains to the top, organise in buy, and then let's start with these. So computer share. The original switch here was from sell there into buy. It continues to move higher. If clients are not already exposed to this, we're not chasing it. Obviously, computer shares are beneficiary of both a strong US dollar and higher interest rates. And that's continued to drive profit growth, but the stock is getting a little expensive. So Coles, we continue to like this as an income play for portfolios. It switched here from sell conditions into buy. We got support down here at around $16. We've had sort of this higher low formation and it pushed higher. Interesting, we are going through at least some level of risk off, and you're seeing, so for example today and in the US, infrastructure stocks, defensive names, they tend to be where the money's rotating back into at the moment. So if you're holding Coles, stay long, despite you got the red arrow there, the price action's above the moving average, and you might want to ride that a little bit higher. If you're simply running a long-term investment portfolio, again, you're less focused in looking at it, what's it going to do tomorrow or next week, but what you're focusing on here is holding the stocks in the portfolio that are under algorithm buy signal as per the model portfolio there. So moving through CSL, so this was a recent addition here. So the algorithm shifted there from sell signals into buy. We recognise this as a nice higher low formation. We've created sort of that pivot low, the first test, first fail, and we've seen CSL rally again under red arrow, but not getting too concerned there. For traders, if we see it reverse under that moving average, but again for long-term investors, from red signal into green, you add it into the portfolio, and you'll find it there in the model portfolio that we looked at earlier. Origin Energy, obviously takeover bid here. We've taken profit on this, so the original signal switched from sell there into buy at $4.70. And date-wise, that was the 30th of, or say the 1st of the 12th there. So the offer on the table here, we've locked in those gains and just reallocated that money elsewhere at the moment. And Origin and Woodside has been among the top performing stocks in the model portfolio. Amcor, the view here is it's probably likely to trade sideways, sort of consolidate around this $17 level. But the company's delivering high single-digit earnings growth. They're offering a reasonable yield. The correction from 19 back down to 17 puts it back in a fair value range. I expect to see this support of 16.50 hold, so bumping sideways, but ultimately likely to break higher from that consolidation. And the switch there was from sell into buy. It's been in the model portfolio for a little while. GPT still remain cautious on going to overweight individual REITs. We're preferring to consider like that Vanguard property ETF as a replacement. But if we think about quality, Goodman Group and GPT certainly stand out. GPT's under algorithm buy signals. It's in the model portfolio. We've got sort of that first test, first fail there. Break back below 380 would be negative for GPT. Treasury Wines, we own this. The switch there from sell conditions into buy, supported around that 980 level. The view on this for some time has been that it's consolidating, but earnings are going to pick up, and we'll see it break to the top side of that consolidation. That's certainly what's happened there, and the old pattern there of the old resistance becomes new support. That's what we're seeing here, and the support levels around $12.30 there in Treasury Wines, and we've had a more recent algorithm buy signal to support that higher low structure there. Brambles, a fairly new entry into the model portfolios. So for the switch there from sell into buy, support there at around that $11. We've got the higher low formation. So again, for short-term traders, what you're looking at is this first test, first fail. You're looking at a stop loss below that first test, first fail, or just below this point here where the mouse is. If you're running a long-term investment portfolio, you're more just focused on the switch there from sell into buy and continuing to hold Brambles. As I mentioned earlier, we've got improving earnings and a fair valuation on Brambles, so comfortable having that in portfolios. As we are with Endeavour Group, so under algorithm buy conditions there, supported around that 670 level. Northern Star, so we started to see a recovery in these gold stocks. Northern Star remains our preferred gold exposure in the top 50. Cochlear, see support here at around this 190. Again, you got the sort of pivot low there at 180, the higher low there at 190. What we are seeing in the market at the moment is probably something in the order of 80-90% of stocks showing these red arrows, and that's maybe just a function of a little bit of exhaustion in the market. The index has had a really strong advance, and we now just have to wait and see whether it just consolidates and moves higher, or whether it breaks through the bottom end of that 10-day average, like I was highlighting earlier in the recording. But Cochlear is a high quality business. I still think Alec being overweight healthcare in general makes a lot of sense. So Cochlear is a stock that we like in the portfolio at the moment. As is Telstra. Ultimately, we're expecting Telstra to consolidate and break higher out of this channel. So if we look at the history of the algorithm, it's gone from sell conditions there into buy. We've had these subsequent signals, but the stock's really predominantly moved sideways. So it's really been a story of capturing the dividend, the franking credits. Santos. Oil and commodities are starting to pull back a little, so they've had a reasonable rally, but we're now seeing a little bit of retracement, and it's partly to do with obviously further COVID restrictions in China, slight sort of repricing of slightly slower global growth. In the case of Santos, it's now down on that first level of support, which is 730. The next level of support would be down here at 680. Starts to sort of come onto my radar within this value range here at the moment. So for me, somewhere between 675 and 725 thereabouts, I start to take a closer look at it. Ultimately, we would like to see the green arrow and possibly another algorithm buy signal, but the buy signal's fairly recent there in early July, so it switched from sell into buy, and that was the point it was added into the portfolios. Woodside Petroleum, the switch there from sell into buy, support there around $20, continues to make higher highs, higher lows here. Maybe a pullback into Woodside at around 35 might be worth another look. ASX under buy conditions, albeit that this one's trading below the original entry level. When you actually step back and look at what's happened here in ASX, it's really been trading within sort of this band of 65 to say $90 for the last 3 years. Whilst earnings have increased, the PE has expanded as well. The earnings growth of the company is fairly low and probably likely to be slightly negative over the next 12 months, I think. Extremely high quality business, but maybe at around this 65, 70 $5 type is the new sort of consolidation range for the ASX, and we'll just have to see what the earnings numbers look like. Transurban, so now what's happened is we've finished going through the stocks that are under buy conditions. So again, we've moved all the way through these. We're now into the stocks that are under sell, and I'll just provide some brief commentary on these before we move on to the pivot table. So Transurban under sell conditions. So at the moment we're getting ready to close the balance or the remaining of this position out. We're just trying to squeeze a little more out of it. We know it's under sell conditions, it's under red arrow, but it hasn't yet rolled over below that moving average. But certainly up here around 14.50, something like that, we'd look to tidy up and close out the balance of that position. APA, we've already taken profit on this. As we have, well, actually not in Stocklands, we don't own Stocklands, haven't for quite some time, but you can see here the predominant trend, lower lows, lower highs, and you've got the sell signals there. Westpac, the banks are probably are delivering okay growth or improvement in their margins, but we're still not really seeing top-line revenue growth. I think ANZ might have been a slight standout with about 5% growth, but I don't think there was too much impressive there on Westpac on NAB's numbers. But the banking sector as a whole, okay for dividends, franking credits, just not sure right at the moment the growth drivers. And tied into the index. So if we start to sort of feel that the index is ready to rally again, happy to take a closer look at the banks. But our preference has been the BNKS, which is the international banks, and they've had a much better price advancement than the Aussie banks. Lendlease, one to think about is what I'll say here, is that the turnaround story in Lendlease could be substantial over the next 2 or 3 years, so don't get too negative on it. Keep it on your watch list, and if you start to see momentum improving there, you might want to think about that. Ramsay, looking for a bit more upside in this. It has shifted to algorithm sell signals, but we'll continue to monitor this, looking for maybe a push up towards $65, $70. Wait and see as we get through these earnings results. ANZ Bank under sell conditions. Woolworths undersell, but again, not the risks are not substantial here in Woolworths or Coles, but just pointing out that Woolworths is undersell, Coles is not. But upside in Woolworths probably capped at about $36, $37, I think. Not doing there at the moment. Wesfarmers, expecting Wesfarmers to ultimately break out the top side of this $50 resistance. When it pulls back, we'll see a higher low, and that'll be added back into the model portfolio, and we'd be very happy to hold Wesfarmers longer term off the next algorithm buy signal. So in the early part of the new year, I expect to see a pretty strong buying opportunity there in Wesfarmers. CBA up against resistance at around 106. Medibank not doing there at the moment. Centre Group not doing there. ResMed a little expensive at the moment. NAB up against resistance at around $30. Mirvac not doing anything there. Insurance Australia under sell conditions, looking for a better structure to develop early in the new year. Again, it really needs to break up sort of through to that 550, pull back to around $5, and we'd look to add that. Qantas likely to shift to algorithm buy signals in the coming probably weeks or months, maybe not weeks, but certainly in the next few months, so in the early start part of the new year. Pull back in Qantas to around $5, likely to produce a buy signal. Mineral Resources, definitely if you don't own this, you want to be keeping an eye on this in the early part of the new year. The next major pullback there will be a buy. Dexus not doing anything. Suncorp not doing anything. QBE not doing anything there. Aristocrat needs to break through that sort of $38 level, create a higher low before that goes to buy signals. Macquarie, lower lows, lower highs, resistance at around 180. Sonic, lower lows, lower highs, resistance there at around 34. The downside risks are probably not substantial there in Sonic. I think sort of that $30, $31 support should hold there. Goodman Group, high quality property trust. Again, we'd love to buy this in the early part of the new year on a shift back to algorithm buy conditions, but we'll just continue to monitor that. James Hardie, lower lows, lower highs, sell signal there at 38. Continuing to move a little bit lower at the moment. Newcrest recently just had another sell signal there. South 32. So interesting in these commodity names. If we have a look at them, we've got lower lows, lower highs, overhead resistance there at around 450. The red arrow and the price action predominantly below the 10-day average at the moment. BHP, so we've seen this largely under sell conditions, lower lows, lower highs, resistance there at around 45. If the sell-off maybe dipped down to $39, $40, we may see that shift to buy conditions, which will be really interesting from a timing standpoint. Rio under algorithm sell signal, so the last signal there was around 120. Moving lower, a little bit of a breakout again. We'll monitor that for a shift back to buy conditions. Seek, we had the sell signal there at around 32. That certainly moved lower. Blue Scope, predominantly under sell signals there. Zero under sell signals. Zero again, maybe like probably if I'm looking, months down the track, which stocks could be getting to oversold levels. Zero and Lendlease stand out as ones that you would want to just keep on your watch list and just watch for a major change in momentum in those names. They're high quality businesses that are under pressure for good reason at the moment, but not likely to continue indefinitely. Fortescue, under sell conditions, we had this counter trend trade in the iron ore. So if you've been following the recordings, we were bullish on iron ore having a rally higher. That's happened. I think we're now at a level where it doesn't hurt to take some profit on those trades. And there we are, back to Computershare. So just to finish this evening, I just want to jump into this pivot table and just talk about momentum trading. And we touched on it a bit as I was moving through those charts. So we go pivot table, go down to ASX 50. And what we're seeing in the market at the moment is, despite a number of stocks being under primary long signals, we're not getting these confirmations off the short-term momentum indicators. And again, if you're joining for the first time, I know it's a lot to sort of follow and absorb in one 30-minute session here, but the pivot points, ideally if you were looking to go long any position in the market, you would see the long signal, you would see the green pivot point arrow, and you would start to see the price action moving up above the moving average, and then that stock would drop into there. What we're seeing at the moment is not that nothing's under long signals, it's just that the ones that are under long don't have that green arrow and they don't have the price action above the average. So what we do have is a few stocks now that are starting to appear on the short side, and they have a negative pivot point and are below the moving average. Now, I'm not aggressive on any short positions at the moment because the index is still largely moving higher, but that first warning's there in place with the red arrow. So let's just have a look at these short positions though and just see what they have in common. So they're under algorithm sell signals, they have the red arrow, and the price action is now below the moving average. So Aristocrat, NAB, so the NAB under sell conditions, red arrow, had the first test, first fail, and it's moving below the 10-day average. And Newcrest now, so we've got sell signal, red arrow, and the price action below the moving average. Now, if you're running any short positions in the market, especially if you're not monitoring the index closely, then you need to be running tight stop losses. So any of these short positions, stop loss would be on a reversal back above that 10-day average or a break above that the pivot high essentially there. So the mentoring courses that we provide help to provide a lot more explanation on the strategies, and I encourage all clients that are running a combination of investing and trading to separate their trading account from their investment account. They're two completely different disciplines. And I'd like to spend time with you helping to educate and mentor you around the processes that we use, and obviously get the technology set up for you so you can have full access to it along with the daily analysis and research. So if you'd like to talk to me about that, please give me a call on 1300 614 002. I hope you enjoyed tonight's public webinar, and I look forward to welcoming you as a member next week.